Hey everyone, it's Michael Valtos from Order Flows, and welcome to the Next Level Order Flow Trading course. This is Module 1, Market Reality. Now, before we begin, do understand that trading involves risk, alright? Don't trade with money you can't afford to lose. Alrighty, so what is a footprint chart? Well, a footprint chart is just a way to organize the volume traded. There's nothing magical about it, but the importance of organizing the volume traded lets a trader better observe the two-way auction and how it's developing. That's what separates a successful trader from an unsuccessful trader, the ability to recognize the changes in the two-way auction. All right, this is your footprint chart. And what's going to separate you from other traders is the ability to see things in the order flow, see things that's trading, that's going through either at a price or in a bar. That's going to give you an advantage over other traders. Now, having a great platform, a great software to help you analyze the market, it's one thing. If you don't know how to utilize it to its fullest potential, what's the purpose of using it? Because all you'll be doing is frustrating yourself and not realize your own potential. And, it's like these people that go out and spend, $1,200 on some fancy DSLR camera and then use it in automatic mode, right? That's not taking advantage of the camera. They're better off just using the camera that's on their iPhone, right? And same thing with order flow, right? If you don't know what to look for in the order flow, right, how are you going to use it to your advantage, right? When, a lot of people like to look at a chart and they'll say, well, previous support, previous resistance becomes support, and vice versa, and go from there. Well, here was, your high of the day right up in here, but the market went up, made new highs. It didn't come back to this high, right? It came back to this level in here. Why did the market come back to that level? And understanding things about the market, especially in the order flow, you're going to know why we came back to this level, right? If you're just looking at, well, we made new highs, okay, I'm going to put a limit order to buy at the previous high because now, technical analysis tells me that previous resistance, which obviously was the high of the day, is going to become my new support, right? And you put a bid in here, you get long, the next thing you know, you're getting stopped out as the market pulls back a little bit further, right? And why does it pull back to this level? Well, if you look at the order flow earlier, you see the value, the overlapping value that's forming here, right? Remember, what is value, right? It's a form of balance in the market. Now, I don't want to confuse you yet on balance and value. Don't automatically assume that value is balance, right? But when you have values that are overlapping and overlapping and overlapping, you're developing balance, right? This market was in balance at this area in here. We sold off. We came back up to that area of balance. Now, again, I'm showing you this on my Order Flows Trader software. Now, if you're using Sierra charts, Motive Wave, Jigsaw, etc. You have to investigate the software and find out what its true potential is. Can you analyze the market looking at value? I know you can on these softwares. This is not a how-to video on how to set up Sierra charts. You have to, put in the effort. Motive Wave, you email the guys there. I'm sure they can tell you, things like Quant Tower, it's available. Now, really, the easiest thing to do as a trader is to follow the money, right? Your trading software should allow you to follow the money. If not, get new software. You spend a lot of money on software. Why not know how to use it? And best of all, keep trading simple, right? Everybody likes to complicate things, whether it's trading or whether it's cooking or whether it's building furniture, right? Like myself, my wife used to like to go to IKEA and buy things that I would build for her. For some reason, she thought I was some great carpenter. I don't know where the hell she got that idea from, but she, oh, look at this. Hey, I don't want to buy a ready-made one. You could go to IKEA. You could buy one and put it together. Well, yeah, me personally, I'd rather buy a ready-made one because I know it's stable and it's solid. Whereas, you buy the one from IKEA, it's a little flimsy. Then you got to spend all afternoon putting it together. Okay, well, trading software should make your life easier, not harder. Just like buying the furniture from IKEA, yeah, you save a little money, but it makes your life harder. Okay, and having the right trading software should make your life easier. Now, when I say follow the money, right? If you're looking at a bar chart, you're not going to see the money, so to speak. And how does the money show up? Well, it shows up in volume. It shows up in aggressive activity happening in the order flow. Okay? And once you know what to look for, and I'm going to explain to you in this course what to look for so you can understand where the, quote, money is, so to speak, where it's participating, where it's getting active, then it's going to make your trading a lot easier. So the reason you have to follow the money is you got to realize you're trading against more experienced traders. And oftentimes the more experienced traders, the true all-stars of traders, trade big money, right? They move the market just by the sheer size of their activity. But you got to know your limits as a trader. You and I, we're not going to move the markets, And the way to describe it is, we may be good in a sport, right? Basketball, right? And, we go to the gym, the Y, and, we could play okay, but we're not going to play at NBA level. And maybe we might do good in 2 minutes against a great player, but, over the course of a game, no, we're going to get shellacked, we're going to get mopped up the floor with, And imagine doing that day in, day out, right? Trading against, really good experienced traders day in, day out. You got to know what you're doing. You got to know what they're doing, right? I mean, how can you, think of it, trading in sports, right? A lot of overlap in terms of psychology and mindset. The great players don't just, sharpen their skills. They realize who they're going to play against, and they build a game plan. I don't want to say trading plan, a game plan to take advantage of those situations when they're playing a particular team or a particular player. So what is the money doing, right? That's a question you should always have in your mind. I don't want to say constantly be asking it, but, make it part of your mindset, when you're looking at a chart, what is going on? Is money, is quote, the big money participating, right? And obviously, the easiest way to see it is in the volume, right? If it's picking up, obviously, this big down bar here, right? Obviously, you got big volume, 5,000, whereas all the other bars is just, 2,000, 2,500. Okay. Second thing is you look at, imbalances, right? The big traders are going to cause the imbalances because the market's going to move fast. If a market is 5 bid at 6, 20 lots, 200 on the bid, 300 on the offer, and all of a sudden, boom, someone buys all 300, turns at 6 bid. That's a big trader doing that. Okay, and it's going to show up because there's going to be little counter trade happening at 5. He lifts everything at 6. Next thing you know, it's 6 bid, lifts everything up at 7. Right? Next thing you know, it's 7 bid. Not a lot of people had the opportunity to sell 6s and sell 5s. That's what causes these imbalances in the market. And when you see imbalances appearing in the bars, okay, well, maybe there's some big money starting to participate. Another way you could look at it, obviously, is the deltas, but the max and min deltas. Are we closing near the max or the mins, right? If the market is moving lower and you're seeing a lot of aggressive selling, here, the min delta is minus 515. The final delta is 510. So what's that telling you? The most negative delta was in this bar was minus 515. And we closed almost right on it. We closed at minus 510. So it's telling you here that this bar, the sellers just took it over, right? There was some, it was evenly distributed. You had 126 delta, okay. But then the sellers just dominated it, right? And we closed it almost on its extreme at negative 510. We're just 5 contracts off here. And that's information that you could have from the order flow well before you get that big flush here with the big volume, right? Everyone's going to see this and, it's going to stand up and say, oh, I got to get short now. But here you are coming in 2 bars earlier before this big bar down, right? To take advantage of that, right? That's the beauty of order flows is it helps you get into trades a lot sooner than everybody else, right? Again, ask yourself, what's the smart money doing? Is it doing anything, right? Sometimes they're just doing nothing. The market just facilitates trade back and forth like you're seeing here. There's nothing really stands out in here, yeah, you got a little push up, came back down into the value area, right? Into this balance area where the market is rotating. Sometimes the market doesn't give you any clues because there's no clues to give you. The market's just facilitating trade. You know, sometimes we all like to think we're, you know, Inspector Clouseau. I'll say Inspector Clouseau. He's kind of a klutz, but Hercule Poirot. You know, like, oh, we're going to solve the mystery of the market. Well, sometimes there's nothing to solve. Sometimes the market's just doing what it's supposed to do and facilitating trade. Whereas other times, like this chart, it's really giving you something solid to sink your teeth into, right? Again, you know, what's the smart money doing? Is it doing anything? Well, you know, it's mostly going sideways. Then you start to see it getting flushed here, right? Imbalance is down. You know, it looks like it's possibly going up here, right? It's just sort of grinding its way up. You know, not on any spectacular volume, but, you know, once you become better at understanding what's going on in the order flow, you're going to pick up these little things, right? Look, as this market starts selling off, look at the max delta. It's very small, 8, 7, 102, 0. That's nothing. Everything is mostly near the min delta, and you have nice strong deltas here, negative. Obviously the volume is just a shade heavier in here, which is also good in the bearish sense. You know, that's going to tell you that, you know what, this market it's got some selling behind it. Okay, you know, on this move up here, you know, it sort of looked like it was going to happen. You got max delta, very small min deltas, but then it just came back, boom, right? It just dropped down. Min delta minus 424. We closed at minus 333 right in here. And even the next bar, very small max delta, and so on. And as we dropped further. And again, you know, more examples. What's going on in here? Look at this. Very little buying. Here was 102. Okay. 0, 40, 0. You know, a little bit of a bounce right here. 211, but it still closed negative. All right. Not yet convinced. Now, granted, this is the opening price is 39.07 on the 11th of Feb. And, you know, when a market's lacking direction, it often just rotates around the opening price. But then as you come in here, you got this bar. 0 min delta. It's a big red candle. Max delta is 481. Final delta is 237. But what do you got in here? Right? Well, you got this imbalance, 38 against 233. People say, well, you got buying imbalance. That's bullish, right? It's actually bearish in this case. And, you know, we're going to talk about this more later, is what you have here. Look at this volume here, 161, 119, 254, 233, 129. Right? It's slanted to the offer side. There's someone offering out up in here. You catch this buying imbalance, market keeps trading down. That's bearish. It's a very bearish bar, actually, even though people are going to say, well, look, you got positive delta, no min delta. Well, you got to be asking yourself, well, if we have something that looks very bullish, why aren't we going higher? Then you start to analyze, well, that's because people were offering it out here. And then you can see the selling just takes over and expands as we keep selling off here. Right? But this was the tilting point right here. You know, it gets a little bit mixed in here, negative delta, positive delta in terms of max and min. We end up negative. Then very strong in relation to the min delta, minus 119. This is minus 116. Here's all min delta, nothing positive. All right, so if you're looking at this point, okay, you got to decide, what do I think is going to happen here? And if you're staring at it, it's obvious that it's bearish, not bullish, right? And, you know, all you got to do is you sell one lot. You got to stop up in here, right? Then you see this big bar here down with a big negative delta. Okay, great. I can add another one. And it's just all confirming it. Look at this, minus 775, minus 712, minus 1400, minus 1300. Look at these max delta, 0, 45, 0. These are nothing. It's all dominated by sellers as the market continues to sell off. All right, so, you know, a mistake a lot of traders make is when they think of order flow, they think they have to disregard their existing method of trading. You know, that's wrong. The strength of order flow is that it can give you confirmation in your analysis if you have another form of market analysis. That's the beauty of it. It's not like you got to take everything you ever learned about trading and throw it out the window. No, you can add it as a tool to help you find better trades. Okay, so this is just, this is N bars up, N bars down, right? This is it's a nifty little, I don't even want to call it an indicator. Basically all it does is it draws, it marks, you could choose, how many bars consecutive down or how many bars consecutive up, and it's going to draw the line, right? Tell you, okay, well, you got 3 bars up here, here, continuing. But look at this, right? Oftentimes, in trends, you're going to see, consecutive, more, and up, or you sort of get, the one. And the thing is, it's easy to look back on something like this after the fact and say, oh yeah, that was so obvious, right? Well, I got those 4 bars there. But when it's one, the first one, you don't know if you're going to get a second one or a third one. Just like here, the market's coming down, you got this one red bar here. Okay, well, you don't know, is it going to be another red bar afterward? Is this market going to keep making new lows or what? But if you're looking at the order flow, right, take into account what's happening as you're coming down, negative delta, okay, then smaller negative delta, even smaller negative delta. What's happening? This move is getting weak, right? Then it starts going up. You got your 3 bars up. What do you see? Well, you see nice, strong, healthy delta. Obviously, it's not, it's not like 200, 300, 600, 1,000. It's 1,000, 600, 200. It's getting a little bit weaker, but then it comes right back with a nice, strong one here, 664, right? Another 200, another 1,800, right? That's how using order flow can help you, right? It's going to help you see things, strengths of moves, weaknesses, etc. Keltner channels. A lot of people like Keltner channels. Okay, that's fine. Again, you want to add order flow to it. You don't have to disregard it, right? And if you trade Keltner channels, you hit the bottoms of the channels going down, you stay short, right? But at some point, it's going to stop going down, right? It's going to stop and it's going to reverse, go inside. Okay, well, here it is. What are you seeing in here, right? Earlier you had the one green bar, came in, came back out. Got negative delta, still negative delta. But as you're coming down here, you're starting to see some signs. Positive delta, positive delta. You get that one last flush here. But you get a huge positive delta here. 1,500, right? It's on the back of this bar that had a nice big flush down here with minus 2,200 in delta. No min delta. Okay, so what do you think the chances are? I think we're going to rotate back inside? Yeah, we did, right? On the bar chart, you saw it. But as the market keeps selling off, right, you got the negative delta. Okay, that's good. If you trade Keltner channels, right, it's coming down, it's outside, you stay short, you stay short, you stay short. It pops back in a few times, but overall it's still short. But then you get to this bar, the big buying comes in. Okay, yeah, this move's done. Same thing here, right? We're going up. Okay, we break out, we hit this high, then we come back inside. Okay, well, what are you supposed to do there? Well, if you're watching what's happening in the order flow, delta, 600, 500, 200, negative. Okay, so chances are this move up is over. Okay, you can see point of control comes back inside the Keltner channel. Right, so this move up is done, right? Don't sit here holding your longs thinking, well, we're just coming back in, now we're going to pop back up. No, the order flow is telling you, you know what? That's it. This move is over for now. So if you can understand why, if you can't understand why a market is doing what it's doing, it's going to be very difficult to trade that market. You're going to be trigger happy and anxious. And what that means is you're going to be over trading, right? You're going to take trades you probably shouldn't be taking. Now, a simple bar chart has 4 data points. It has the open, the high, the low, and the close. An order flow chart has the same 4 data points, but it also allows you to see the aggressive buying, the aggressive selling, how much volume traded at each bid and offer, and the price level where the most volume traded. Now you can see things like value, the value for a bar, right? And there's so much more analysis you can do when you expand your data points, right? open, high, low, close. Everyone's data mined that stuff to death, you know, with the advent of the home computer. Now you've got data points that people don't have. Well, they have, but they don't use them because they don't understand them. The order flow, right, is giving you simple data points that people just don't have, right? You can see here, right, point of control, right? It's just sort of hanging around, same level, but then you see it break, right? Lower, 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 a little bit higher, lower, a little bit higher, okay, boom. Bearish right here. This point of control is very bearish. It's a prominent point of control. Lower, 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 okay? You could look at imbalances. Imbalance, selling imbalance, selling imbalances. Selling imbalance, selling imbalance. You got a couple buying imbalances thrown in there as the market tried to recover a little bit, but overall it's negative, right? And that's the beauty of it. And you're not restricted nowadays to just looking at the bid and the offer, what traded on there. You could look at delta in a bar, you know, not just in a bar, but at price levels, okay? So you could see here, right? This is the delta. Now this is, you could look at it diagonal across the bid offer, or you could look at it horizontal at the price. And there's going to be a lot of information you gain from here. You know, I did a whole course earlier, not earlier, but over a year ago, on delta and how to use bar delta in here to find good trading decisions. And you know, you'd be amazed at the amount of information that you can use, you know, just by looking at a delta footprint chart. You know, that takes it a step further than your normal bid-ask footprint chart. Now you could add value areas to it, right? So you can see where most of the delta has been happening in relation to value. Okay, and you know, one of the most important things I want you to take away by the end of this course is understanding where the market, where a bar rather, is trading in relation to its value, right? Because you're going to find some very, very important, how to say it, you know, important aspects of market movement that you haven't really thought of before, okay? You know, and just really simple, basic one, okay? Take volume profile, market profile rather, right? And you know, go read James Dalton's books, go read Stottlemyre's books, and you'll find, right, they talk about this quite a lot. Market opens above value, trades through value. What does that mean? All right, well, that's bearish, right? Or if we open below value, don't even come back into it, and start to move lower, that's bearish, right? So you could actually take that information that you know and apply it on a bar by bar basis, right? Look at this. This is a beautiful, this is one of my favorite ways to use value. Is I have this type of bar, right? I got the value area up in here, right? We open here, trade all the way up, we put in all this value up in here, but we don't hold that value, right? Market closes down, right? Closes down here. The next bar starts to sell off. What's that telling you? Well, we just formed this value area in here, but we rejected it. We rejected this value. What do you think the market's going to do? You think it's going to just turn around and start going back up? Chances are no, because otherwise we'd be trading in that value. It rejected that value. And you see how the market drops down. But I'll be talking more about that in the later modules. So don't become narrowly focused on price that you miss what's happening in the two-way auction. You know, a lot of traders get stuck on price, and you know, honestly, they don't even know they're stuck, honestly, because they just look at price. They don't look at anything else, right? And this is the type of thing that they don't understand. Why does the market pull back to a certain level? You know, they're going to be looking at price. Oh my gosh, price is dropping. I get short. They get short. Next thing you know, the market rallies back up, takes out the highs. But if you're looking at the order flow, you can see you got the point of control down there. You just look at the heavy volume here, 409, 125. Okay. Again, realize what's happening in the order flow. Why this market stopped here is because you had liquidity sitting here, the 409, the 125. People like to have all these fancy charts nowadays, Bookmap, liquidity heat maps and everything. And that's fine. There's uses for those, but if you're watching a footprint chart, you can say, oh, wow, 409. Is that a lot? People are going to say, well, do I got to memorize all these levels? Well, no, all you got to do is you look. Earlier, it was 43, 154, 97, 30, 90, 189. Here's 300. Okay. 141, 300. Here's 500. 190, 130, 190, 225. Well, 400 is big, right? You don't see very many levels in any of these bars over 400. So you know that there's some decent volume there supporting the market, right? So a common misconception among traders is that the market is always correctly priced. It sort of goes back to the random walk theory and, all the information being disseminated in the market. But if that was the case, if all the information was in the market, about the market, and if it was accurate, prices aren't going to move, right? Market's not going to move. It's going to be very boring. Market's going to stay 5 bid at 6 all day. Maybe it trades 7, maybe it trades 4, but it's just not going to move. So successful trading is not just about following price on a chart, right? You need to also follow the big orders, right? I talked about big money. You could redefine it as big orders if you like. Big orders show up in the order flow. But most uninformed traders think the tape is a random walk, right? But is it really? People always talk about the market being random, but it's not random because people are trading it, okay? It's not like people just sort of wake up, throw a dart at the board. It was funny. There was back in January of this year when, all that Reddit, the Wall Street Bets and all these people, were buying up GameStop and all these other stocks. There's an article about this guy, because the market, basically, after we hit that low during COVID times, the market's been rallying. You could buy anything really at that, back in August, September of 2020. You could have bought anything in the market and it would have gone up. That's why I laugh. I see these stories of, this 12-year-old boy, got 40% returns in this 3 months. Well, it didn't matter what you bought. You could have just closed your eyes and bought anything. But what was funny was there was a guy, he was up like 20%, and his stock picking method was he had a bag of letters from Scrabble, right? If you ever played Scrabble, right, the word game, and he would just pick random letters and find the stock symbol closest to those letters and buy those stocks. It's stupid, but hey, you know what? Honestly, like I said, it's not necessarily a random thing. People are trading these markets, but again, the people like that, they're just small fries. The big fries, the people that move the markets, have volume to move, right? And you can see their volumes in the order flow, right? You can see, but you have to understand what is considered decent sized volumes, right? And that's why I like using values, because having a value area on a chart helps you define where the most volume is. And honestly, if it's spread out a bit, the market is facilitating trade over a wider range, and that's good. It's good in healthy markets. But as you can see here, right, you got decent volume appearing in this value area, decent volume appearing in that value area, decent volume, slightly, this one's about average, this one's above average, this one's slightly above average. That's what you like to see, right? The healthy volumes going through the market, right? Up here, we're going up to the high, 800, 700, okay, 2,000, you make the new high, back to 700, but then 2,600, 1,500, 2,500. Volumes have picked up. Why? Is because bigger size orders are coming into the market. This was interesting. Market selling off a little bit. Hits this low here. You got big resting liquidity here. 1,300 trade here. 862 trade here. People are selling it. Sell some more. Sell some more. We're going lower. Somebody's down here absorbing it. Right. That's why you got this big negative delta. But market doesn't go any lower, right? Traders are selling the heck out of it, but they're not getting rewarded. What do you think is going to happen to the market? You know, it's a combination of big sellers not getting rewarded, but then you got a big liquidity bid sitting right here, right? Even up here, there's big liquidity, 862. Finally, the market realizes, you know, hey, we can't sell anymore and move this market down. It's going to reverse, right? That's why you see the imbalances, the imbalances, the imbalances as the market goes higher. Now, big volumes, okay? So here's a market, starts taking off. Now, here you've got some zero prints, okay? What's happening is big orders are going through the market. Somebody is sweeping through the order book, right? Why? What is this? Sweep is, you know, someone is very aggressive. They're lifting these offers. 200, 93, 161. They turn it bid here, right? They buy the 111 here, turn it bid. How do I know someone's sweeping through here? Obviously, you got the 1900 up here where they just turn it bid. You know, they started buying down here, 82s, 83s, 84s. You know, they don't want to pay, or sorry, 32s, 33s, 34s. Gets up here to 35. Okay, that's my limit. You know, they just work a bid there. Okay. That's the big volume. It's an order working through the market. So as a trader, it's better to be looking forward rather than looking in the past. And what that means is you should be visualizing what's happening based on the current order flow. You know, when you see something in the current order flow that's bullish and the market initially moves opposite but can't push away and starts to come back to the bullish point, the odds are high the market is not, you know, is going to exhibit bullish tendencies. You know, that's a hard concept to people to understand. You know, it's let me show you on a chart, okay? And the best way to describe it is market going down on positive delta. Mike, well, why is the market going down on positive delta? You know, you got positive delta, you tell me it's aggressive buying, the market should go up. Well, yes and no, okay? You got to understand why you have positive delta sometimes. And obviously you got this green bar here, positive delta 910. You know, there's some buying in here, aggressive buying. Obviously the 41 against 904. This bar is kind of mixed. It's small positive delta of 45. Then you got the negative delta 204, positive delta of 443. What's happening is as you start coming down, there's people offering it out here, here. Now in this bar, you can see the 530 against 303. Well, you don't have a positive delta in this bar is because once you sort of hit that level up here, it triggered, you know, more, or not actually triggered, but it attracted more sellers to come in and start hitting all these bids, okay? And then these sellers, these passive sellers, are happy to move down their offers or work lower offers when it starts moving down. Here you got positive delta 443 because when it's trading 97 against 7.25, there's a big offer there. People are buying that, right? That's why you got the positive delta 443, right? Someone is absorbing all that buying that's happening here, right? And that's sort of like putting their foot on the neck of the market, right? And you can see how the market just, it holds that level. There's a strong seller at this level here, and the market sells off. And, you know, I showed you this one earlier, right? Yeah, price is going down, down. But what's happening in the aggressive selling? Well, it's getting weaker. It's 1,000. It's 1253. It's 268. Okay, then it's just 396. Actually, I didn't show you this one. The reason I thought that was because it looks like a chart from earlier, because all these things, they happen over and over, and a lot of times they look similar. I mean, obviously the numbers are different, but in general they look very similar because these things, it's the market is doing it. It's what people are trading in the market. I think earlier I showed you one. It was like minus negative delta, like 1500, then 1200, then like 800, and a small negative. But here it's minus 1000, minus 1200, minus 268. The selling has just died off, right? Then you start seeing some buying. Then you sort of get this flip in here, right? You got 396 positive delta. Okay, then this bar negative delta minus 386, min delta, we closed at minus 253. But more importantly, negative delta, you're trading higher, right? The low is above the low of the previous bar, which is above the low of the previous bar. If they're selling, why aren't we going lower? Then obviously the next bar, boom, it just flips. No min delta, max delta is 593, and the market just, works its way back up. Here's another example, big offer right in here. Right? We rally up, start coming off, sellers in here, offering it down. This is what, 1,200, this is 800, 300. They've got, close to about 3,000 contracts to sell just on the offer, right? Isn't that bearish? Yeah, that's bearish. But the market is happy to step in and take it, all right? When you see big numbers like this, on the offer at the low of a red bar, and next thing you know, we're trading above it, chances are it's someone just had a big order they're trying to get through. Obviously, there's buyers that bought those, but if you look, dome traders are taught, oh, you see a big offer, you jump in front of it. Imagine you're selling the 01s here. Oh, there's 1,200 on the offer. I gotta sell these here. You sell that here, and the next thing you know, it's trading 2. Once you get on the other side of that, and you close above it, forget about it. Right? This order went through the market. Okay, it got filled, got executed. It's done. Right? That seller's gone. Once that seller is gone, the market's free to go in its direction. So again, what turned out to be very bearish early on has now turned bullish, right? And sometimes that's a hard concept for people to sort of wrap their head around, but you have to realize, right? Okay, something is bearish, but yet the market's not going down. Well, something's bigger is happening in the market than what you're just seeing in this little 2 bar, 3 price level area in here. Obviously, you got delta increasing as you're going down, 73, 266, 566, right? Why we had positive delta increasing as the market's going down is because you got a big seller in here. Someone's just, trying to get stuff off their books or whatever. It doesn't matter. If there's real selling in here, you'd have some negative delta. You'd see some more selling coming off. This is just probably somebody who's taking, could be taking profits. We don't know what that is. All we care about is seeing that and reacting to it. Now, bar by bar order flow, right? A trader should always be asking himself, what does the current order flow tell you about the market movement and the prior order flow? And what that means is, you got to be looking at it on a bar by bar basis. As each bar forms, watch what's happening in the order flow. Now, that doesn't mean you have to watch every single tick and say, oh, this price traded 37, this one traded 65, and try to decipher that. No, because it's too difficult for most people. But you should be trying to put the pieces of the puzzle together, all right? So each bar's order flow gives new information that either confirms or contradicts the order flow that just happened. Okay, so order flow bar by bar, right? As you're watching the market develop, you want to be noticing what's happening in the bar right now and sort of put it in context with the bars that just happened, right? Are we getting stronger? Are we getting weaker? What's point of control doing? Is point of control going higher or going lower? Are there imbalances, etc.? And the best way to do it is, as each bar is forming, okay, just keep your eye on the delta and, what's point of control doing? Okay, I see point of control is lower. I see point of control is higher. Now it's starting to come in lower, right? So as this bar is forming, you can see, okay, point of control is lower. Now we got another bar, point of control is lower. What's delta? Delta's expanding negatively. It's gone from minus 124 to 242 to 323. Point of control is going down. Obviously, price is going down. And then you get another bar. Oh, negative delta, 600. Got lower point of control. I got some selling imbalances. Okay. You're starting to form in your head, your, I don't want to say bias, but your thoughts of what the market's going to do. Okay, here, point of control side by side. But then boom, we break, trade down, big negative delta. After you're looking at these 3 bars in here, are starting to think, okay, yeah, maybe this market can head lower. And obviously it does. And this is what I talk about when I say, order flow will become second nature, right? Just like driving, it's going to become intuitive for you. Now, again, same thing, right? Market sells off, starts coming down. Okay, hey, look, I got a bunch of selling imbalances here, point of control down here. But what happens in the next bar? We start trading up, and you'll be asking yourself, why? You got some bearish stuff happening here, but the market's trading higher. Point of control is forming higher. What's happening in the market? Why aren't we selling off? I got this nice stack selling imbalance in here. Well, buyers have changed. You see the big bid in here, 474, right? Is 474 big? Well, you don't have to have like a spreadsheet that tells you, okay, on an E-mini 1 minute chart, 474 contracts is big. No, you just look at how it's been trading recently over the last, 10, 20 bars. 474 is bigger than anything in here, 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 anything in here. Now, some people will say, well, that's not very scientific. Well, if you have a spreadsheet and it says, no, 500 is big in the E-minis on a 1 minute chart, well, you're going to miss that, right? You got to be talking about what's trading right now, not an average, that's an average volume that's traded at a certain level over a certain period. That's what's going to doom a lot of people. But if you see, 474 is big, so I know that there's someone came in here and is bidding the market, is happy to absorb any selling that's happening in here, right? As the market starts moving up. And then obviously you got deltas increasing. It's bullish. Point of control's higher, obviously, and we made a nice little move up. Now, bar by bar order flow, by looking at order flow on the bar by bar basis, you can determine if momentum is increasing or decreasing. There's another module on momentum, and there's another module on volatility. If volatility is high or low, what that means. When you're watching on a bar by bar basis, you're going to see how the market is acting in a range, at a high or a low, when it's breaking out or when it's breaking down, or what the tempo is of the market. Again, on a bar by bar basis, the market starts to make more sense. It becomes clearer, right? Again, don't try and take one bar necessarily in isolation. You can, but you're going to get more value by using it in relation to what's just happened immediately before it, right? You got to make your decision based on what's happening right now in relation to what just happened. It's like playing football, American football, football Americano, not soccer. The quarterback is going to adjust the play based on what the defense is putting up, right? And trading is the same way. So you can see here, if you're watching the deltas are getting stronger as we're going up. Point of controls are getting higher. Imbalances are appearing. Buying imbalances are appearing. You had this green bar, big negative delta, okay, but the bar closed up, right? And I get all these sellers selling 738. Why are we trading 3 points higher? Why aren't we trading 3 points lower? Right? You got to be asking yourself that question, right? Well, it's because someone came in here and absorbed all that selling. That is why, right? And what does that mean for the market? If you're just looking at delta by itself, oh my gosh, I got very strong negative delta. The market, I shouldn't be buying, right? I should be thinking about getting short. No. When you put the pieces together, you see, well, I got the big negative delta, market's closed higher. Okay, let me investigate. Well, okay, I got some absorption happening in this bar. So the play is potentially higher, not lower, right? Because it's buying absorption. So it's telling you, if I can see something in the order flow that's really going to give me a sign to get long, I get long. And then you see the market comes back, tests that level, point of control. Then over here, you wouldn't be getting anything in this bar, but this bar, and by this bar, you see delta is getting stronger. You see point of control is migrating higher. You're seeing the buying imbalances. Getting long in here. Okay, fine. I can get long here, 33, 34, all the way up to 40. Individual bars of footprints record and arrange data into an easy to understand format which can show short covering, long liquidation, sweeps, price exhaustion, price acceptance. But a series of footprints allow you to see more advanced order flow that expands your understanding of what's happening in the market, what the market is doing, and allow you to plan for the next development in the market. Order flow will then, hopefully for you, become an if then or else situation. If this happens, then do this. If I did this, that doesn't happen, it becomes the or else situation. You learn by observation. Trading is going to become if then, right? So as the market is going lower, 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 you hit your low. Okay, what's going on here? Well, points of controls are migrating lower. 1, 2, 3, 4, 5. But now we've closed above the point of control. We got negative delta, which is bearish, but it went from minus 700 to only minus 300. Bar still down. Technically, it's down. It's a red candle. But we're closing a little bit higher. Okay. We're closing, not higher, but we're closing higher than the point of control. Why aren't we closing below the point of control? Right? If it's really bearish, it should be closing below the point of control, as you see here, Now, the next bar is a little bit higher. We got a higher point of control. It's a green candle. We're closing above it. Got positive delta. Okay. Potentially bullish. Wait, let me see what happens to the next bar. Pairs up the points of controls. Closes above the point of control. Nice positive delta. Okay, it's potentially bullish, right? Then boom. Then this bar happens, which is obviously your trigger bar. But when you start seeing things like this, where it's holding, that's bullish already, right? Obviously, by the time this bar starts trading and you see these imbalances, it's just off to the races, right? It just jumps 5 points immediately from 14 all the way up to 19. Well, I'll say immediately, but it took about 5 minutes. Now, a footprint chart is very unique, and the information you're able to come away with from a footprint chart is not going to be found elsewhere because the chart is really constructed from trading activity. You can look at all the bar charts you want, but it's not really giving you the guts of what's happening in the market, right? Actual market activity is really what you want to be looking at, not just, well, price opened here, closed there. Okay, yeah, that's good, but that's not going to be enough to really get you, over the finish line oftentimes. The key is being able to interpret the information and use it to develop a trading strategy. That's really what you want to get. And I'm going to talk about trading strategies later, is because, order flow is going to allow you to build a decent trading strategy. Trading plans is one thing, but you really got to have a strategy for the market. And I'm going to be talking about that in a later presentation as we start delving deeper and deeper into things. But obviously, what's happening in the data, right? I don't say the order flow, but the data is really what you're looking at. Well, obviously, you're getting the buying imbalances, right? You got some positive delta, right? And you're seeing points of controls moving higher, right? It's all bullish activity. Just as we're moving lower, you're seeing bearish activity in the order flow, right? As simple as it sounds, it's really going down to the basics. People say, well, price is going down, obviously, but then you start running in here back and forth. Well, price isn't going down anymore. Why not? You start looking at what's happening in the market. Look at this bar, minus 733 delta, strong selling. Right? Even this bar, minus 300. Okay, we got these negative deltas. These are as strong as these deltas on the move down, but we're not going lower, right? You got to be asking yourself, if you're just looking at price, we sold off, we bounced up, we start selling down. Got red bars. Maybe the market's going down. I get short here. Or you get short 69. Next thing you know, 2 bars later, we're trading 71. And you're like, I got to get out. Or maybe even worse, I'm going to give it a little space, 72, then boom, you're stopped out, filled at 72, you lose an extra point. But, if you're reading what's happening in the order flow, you see, oh, there's strong sellers in here, yet the market's not going lower. Okay, then you start noticing you have this point of control down here. Next one's a little bit higher. Okay, that's not a good sign, right? You should be trading down here, making new lows of this move. So what doesn't happen is often very revealing to you if you know what to look for, right? If you see all these sellers selling the heck out of this market, but it's not going anywhere, what do you think's happening? Well, the traders are down here absorbing. I don't say traders, there's probably a few big traders absorbing it at this level. It's another example, right? Market starts coming off, boom, 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 starts popping back up, then sells off, right? This bar is to me is really the key in here. You know, sort of the linchpin. Obviously, we got the single print up here, 6. But look at this, right? Market is going up on some positive delta. We got red bar in here. Well, if this can't be sustained, right? You got that little move up, right? You could almost draw a line here. I don't like to draw trend lines on order flow, but I'm always watching these red bars, right? That have the positive delta as the market's moving higher. You got red bar here, red bar here. There's a doji bar right in here. Usually, once those break, it can be quite a sharp break. You know, this is not something you see very often, where you got 5 bars. 2 of them, 2.5 are red bars, right? There's some aggressive buying coming in here, but there's also obviously some selling. But more importantly, what do you have? All right, you got big aggressive selling in here. Or sorry, passive selling here, passive selling here. Okay. I know there's people offering it out in here, 1259, 600, 569, 554, 854, 759, right? These buyers they're hungry, right? They're eating. At some point, they're going to finish. If that buying dries up, the bottom's just going to fall out, and it does right in here, right? It drops from 80 all the way down to 70, what is that, 75, 76. Right in here, and very fast. Right, so you can notice the shifts in the order flow pretty quick, right? But by watching, this big volume here is decent volume, decent big volumes in here. 759, 554, 669. 569 is okay, but the 1200, okay. Buyers get through that. They're trying their best to push it. And at the same time, people are selling into this, right? The 381, the 539, the 570, right? So once those buyers are satisfied, watch out. Bottom can fall out just like this. They're building, a weak house in here, so to speak. So remember, right? You don't need to be a jack of all things order flow. I cover a lot of ground in this course. And I don't expect you to know every single thing, when this happens, that happens, if this happens, that happens. No. Find at least one part of the order flow and master it. Because if you want to be successful, right, you have to, first of all, you have to find something that works for you in the sense of, yeah, I can work with that. It's like a makeup artist, okay, who's, or a singing coach. I don't say makeup artist, I say singing coach. We'll hear somebody sing, and it'll either just be like, I can't work with you, I'm sorry. But then hear somebody else sing, oh yeah, you know what, you got potential, I can work with you. And it's the same thing with trading, right? And especially with order flow. There's all these different parts of order flow. You have to take that and say, I can work with that. I understand why that happens. It makes perfect sense to me, right? Because if you're trying to understand something and you can't understand it, and then you try to use it in your trading, it's just all going to go pear-shaped, right? It's all going to just fall apart. So I don't expect you to master everything immediately, but I want you to master what comes easy to you and build off of it, right? It's years ago, somebody told me, right? It's when I was when I was working in the bank. It was something to the effect of, you know, sort of like these reviews, right? These peer reviews. These corporations are big on these peer reviews and stuff. And it's always like, you got to be honest. Areas you want to improve and areas that you're good at. And the person told me, it's like, okay, yeah. I mean, there's things that you're good at, things that you're bad at. I don't want to dwell so much on the things you're bad at. I do want you to pick that up, but the things that you excel at, get better at it, right? Master that. And it's the same thing, in trading. And Larry Molnar from Dean Witter, he was the president of Dean Witter. Most people, unless you're born in the 70s and earlier, you don't know what Dean Witter is. It used to be a large trading firm, brokerage, everything, in stocks, futures, mutual funds, etc. One day I was having lunch with him, and he's like, you know what? There's people out there you're going to run into that no matter what you do, you're never going to be able to please them. And there's going to be some people you just get along great with. And, those are the relationships you want to develop further. And, it's the same thing when you're talking about different aspects of order flow, right? You want to find the things that are copacetic with you, right? Things that you get, that you just understand. Develop those first, right? Things that you don't understand, hopefully in time you will. If you don't, it's not the end of the world. Because the thing is, with order flow, there's so many different pieces. You don't need all the pieces to be working in conjunction at exactly the same time. There's people that build whole trading strategies around imbalances. There's people that build whole trading strategies around delta. There's around POC, around value. There's so many different ways to use it to your advantage. So use what makes sense to you to your advantage. And I can't stress this enough. Trading is the best job in the world. And it really is. And besides the money, okay, the money's okay. It's I don't like to think in terms of money. It's the freedom. I always talk about that. Freedom to work when you want to. You don't have to worry about employees. Oh my gosh, and I got to pay insurance and all that stuff. Running a business is hard work. If you've ever run a business, you got to pay people. You have to pay rent. You got to pay electricity, all that stuff. Trading, most of us are already equipped to start trading, on a technical side. Maybe we need a new computer or something like that, but we all got internet. We all got electricity. And we all have our normal stuff, our insurance, everything. But more importantly, it gives you freedom to go on vacation, spend time with your family, right? You can have freedom that you're not going to have working for somebody else, right? So, that's really what I want to impress upon people is, if you can do it, and you can do it, right? It's like training I hate to say it, but it's like training a dog to do something, to roll over, to walk on its hind legs. You can train dogs to do it just as you can train people to do certain things. And it's all in your mind, right? You got to have the right mindset. That's why I call this module Market Realities, because I want you to have, be in reality, be grounded in yourself and understand what you're capable of doing, because you are capable of doing it. So this concludes Module 1 on Market Reality. In the next module, I'm going to discuss the order flow foundations. So I'll see you there on the next module. Bye-bye.